Hello, my name is Katie Wantoch, Agriculture Agent for UW-Madison Division of Extension in Dunn County. Today we're going to be talking about working with your lender. Low commodity prices and increasing debt levels are placing some farmers in serious financial distress. This video series will discuss how you can work with your lender, from learning about the 6 C's of credit that a lender may consider during your loan application, to identifying steps to complete your loan application and establish a relationship with your lender. Lenders may be considered a transaction or relationship lender. A transaction lender, such as a captive finance company, will treat credit as a commodity. It will not invest heavily in sector-specific expertise or in understanding much about your business. Transaction lenders attempt to deliver and manage credit as inexpensively as possible. They often rely on collateral to secure the loan or numerical credit scoring methods, rather than information or careful assessment of cash flows and repayment capacity. A relationship lender attempts to build a complex business relationship with each customer. They will offer you a range of credit products, but may also provide investment opportunities, insurance, advice, and a local presence. You should feel that they are investing time in understanding both your business and your industry. Cash flows and information about your operation may be more important to them than collateral. A relationship lender, because they see value in the relationships, may be more likely to consider workouts or restructure non-performing loans should your business experience challenges in the future. In addition, as a positive and informed lending relationship develops, you, the borrower, would also benefit from reduced collateral requirements, interest rates, and reporting requirements. At the beginning of the lending relationship, however, you may face higher interest rates because of the lender's increased workload. Your choice of lenders and selection of their loan products will also be influenced by the distinction between transaction or relationship lending. Your selection of a financial product may influence your capital costs, liquidity, and risk exposure. Loans should match the life of the asset and have a payback similar to the expected life of that asset. Real estate or long-term loans are liabilities that should be used to finance farmland, buildings, and capital improvements. Chattel or intermediate loans should finance assets such as livestock, machinery, and equipment. Operating capital or short-term loans are considered short-term money that may finance crop expenses, repairs, and maintenance. The maturity of these loans should coincide with the production cycle for the product being financed, usually 1 year or less. Lines of credit can be structured to your farm business needs or to finance planned or unexpected expenditures. Over the years, Farm Service Agency has moved away from making direct loans and toward guaranteeing commercial loans. With the latter, a private lender provides the loan funds and FSA guarantees up to 95% repayment in case of default by the borrower. Lenders may seek out a credit enhancement from multiple sources to assist farmers who simply do not have enough equity to borrow capital from other sources. Lenders may work with FSA, Wisconsin Housing and Economic Development Association, Small Business Administration, Farmer Mac, Access, or other secondary markets. Here are a few tips to maintain a good relationship with your lender. Try to arrange credit in advance. Don't inform your lender of a major decision after the fact. This can destroy trust and credibility and make future credit more difficult or impossible to obtain. Inform your lender of problems or issues that your business may be experiencing and any changes to your business. Even the best businesses are faced with problems that can reduce their ability to repay debt. It is important that you let your lender know of circumstances that could interfere with making loan payments. Maintain your integrity. You expect your lender to be honest, and your lender also expects this from you. Inaccurate information or failure to honor your commitments will jeopardize your relationship as well as harm your credit ratings. Communication is important not only for your initial request, but throughout the whole credit process. In summary, understanding how lenders manage their risks and returns to meet their business objectives will allow you to work with them in a mutual beneficial relationship. The inputs for agriculture are land, labor, and capital. Your lender is an input supplier. They're selling credit, while other input suppliers may be selling seed or fertilizer. It may be helpful for you to think of your lender in that way. Accessing credit or capital is one of the many challenges facing farmers. Agricultural financing can be a crucial tool to continuing production, expanding operations, or trying different enterprises. Through a better understanding of agricultural lending, business planning, and other ways of communicating to a lender, farmers may improve their chances for success.